Welcome to the channel, guys. This week is loaded with report, which is financial report, earnings, and economic data. But before we get into it, if you feel that I earn your times up, guys, go ahead and smash that like button. Also, consider subscribing because here is what we do on this channel. People have asked me numerous times, "Hey, can you please break this down from you create this channel because I want to learn more." There is so much creator out there, but guess what? Only who knows it can teach it best. I have been in that spot before. I have been in that point where I cannot execute a perfect day trade or even a swing trade because guess what? I never had enough knowledge. I never had the background, but all I had was just sufficient knowledge to brought me through. But now, with equipped and better before, with 6 years or more in the market, I can tell you this. This is where you want to be. Like and subscribe. Let's get into what is to come next week and how we gonna break that down. So Nasdaq hit an all-time high last week, and with that said, guys, most are predicting a Black Monday, which is they're saying that the market is going to crash, the market is going to pull back all-time highs, the market is going to do that, the market is going to do this, and all is just speculation. But I think the market is equipped with enough technology just in case. Well, with an all-time high last week, Nasdaq pulled down. Of course, SQQ shot up, but let's see with all the Magnificent Seven to report next week what is to come. And in a couple hours, we will see Nasdaq future trading. If even if it pulls back, it's expected because once I saw that Nasdaq reach all-time high, previous resistance, previous resistance become previous support. Again, Nasdaq got rejected, and I shorted SQQ. I went in, but I took profit too early. I should have stayed a little longer to maximize on my profit. But again, I was at work. I never had the sufficient tools to do so. I was just trading the market while I was on my break at work. But I took advantage of the pullback, and of course, I got out. I bought the reversal. I got myself some Supermicro computer shares for next week. That doesn't mean it's going to continue to rally because again, look at Supermicro computer has been getting a lot of beaten up, and earnings is coming out on the 30th, so that's something to look forward to, but it's not something that I will hold a heavy position on going into earnings because there's just so much speculation with this stock. I don't want to be a part of it, but I definitely have shares in it that I'm watching for next week. And one of my main stock that I'm watching to report next week Wednesday is Meta. We all know what Meta do. Meta tends to pull back and run up. During earnings times, pull back, pull back, pull back. And once we get closer with earnings out, the stock just go crazy, go wild. But this is something that I'm definitely going to get some shares in for tomorrow when market opens because I think Meta is going to beat earnings. Why? It's just the business behind the stock is doing tremendously well. And if we should take this a notch down and go to 1 year, you can see that if we had bought Meta from even in December when Meta was trading at $330 a share, we'd have been up, we'd have doubled our money, triple our money. Or if we had waited until 2024 January to get in, we'd have got in at 349. And again, from 349, guys, to previous high or to where the stock is at currently right now, we would have been up 65% on our investment. We would have tripled our investment, guys. So again, tomorrow will spark my entry in Meta. Even if Meta pulled back down to 400, I'm still holding. Why? Because the company business line is crazy, and this is the reason why I think Meta is going to beat earnings, and this is the reason why I'm getting into Meta. Just like Netflix did, guys, numerous pullback and then recover stronger than before. But there's one stock I want to bring to your attention, what I just found out is WELL. This stock has been doing great, and they're set to report earnings on tomorrow on the 29th, there, which is Tuesday at 8:30 at 8 o'clock. So this stock is something that I will be watching. If they do miss earnings, they found it seems that they have a strong support at 122. Even if they pull all the way back down to $100, I'm definitely getting into it. Why? Because it's something that came across my radar, and I said hey, this stock is looking good and I think I want to get some shares in it. So who is Well and what Well does? So Well have a strong buying point right now. The stock is currently trading at 130 dollars, I think, a share, but who cares? So Well is a corporation in the health infrastructure where they provide a lot of healthcare system, real estate infrastructure, and operating business segment included senior housing operation and triple net patient outcome medical, senior housing operation, care, senior apartment, independent living, and support living. So they're all into the health business. And of course, this money is a sure money because most of the time it's coming from the government who's paying for these senior citizen living. So you contributed your time, and guess what? Depends on the job you do, the government will take care of you. And this is where found that business and then went in. And as you can see, a strong buy on this stock. If you even got in earlier this year, which is if you got in at February, you would have gotten at $86 a share, and you would have been, let me see, maybe look at that, 54% return on your money if you had got in from February at $86 a share, guys. Like, come on, this is something you want to see. This is a company you want to be in. Why? Look at this, continuously trading above our 200-day moving average, and above our moving exponential line. The stock is still trading there. So even if the stock pull back, it's a definitely buy for me on the lower, and keep buying and holding this stock into next year. Because if you had got this stock three years ago, when this stock was trading at $56 a share, guys, look at this. Continuous. And again, strong support at $120 a share. Worst case, if they pull back to removing to $121 a share, is a definitely buy. I don't see the stock pulling back all the way down to the 80s. But again, you never know. But again, this is one of the stock that I'm watching because it proved to me, I've shown with his result that it's a great buy. And next earnings, it's saying tomorrow report is coming out. I guess it's Monday. All right, so what is expected from this earnings? So on the 28th, they will be reporting earnings and estimated at 38 cents a share. So if they report tomorrow above 38 cents, it's going to be a beat. As you can see, they have couple miss, they have another miss, and then they beat past, and then tomorrow, let's see what happened. But if they do beat earnings, then I will be getting some shares. On the pullback, I will be getting some shares for the long run. As you can see, if you had bought this stock 1 month ago, you'd have been up 1.47%. 3 months ago, close to 20%. 1 year ago, 56%. This is something you want to invest in. This is somewhere you want to put your money. A strong buy for me. Again, it's a strong, strong buy for me. So let's go ahead and break down another stock that's reporting. So again, you have Waste Management that's reporting tomorrow. You have Ford that's reporting on Monday, and Well that we just break down. And you have McDonald's. So let's go ahead and break down McDonald's. McDonald's have a lot going on with them, but it's something that I want to look into and wait for the right time to get some shares. So MCD. Let's see what's going on. MCD. So let's go over and see. So again, McDonald's strong pullback. They have 75 cases where people were hospitalized just by getting dinner from their store. And again, one person died from that E. coli, and the stock is trading at $292 a share, and a strong pullback. Again, this stock depends on earnings. You can see a definitely strong pullback again down to $243. But as you can see, with pullback in this company, it tends to push up, pull back, push up, pull back, and again push up, always making new highs. So there is a great future for them, but unfortunately, they are not treating the public correctly, and now they're paying for it because a lot of lawsuit is going to come behind this. You cannot pay for that. So what they're going to have to do is just to settle. And so let's see what happened. But for now, I would stay away from this company because a lot of stuff coming behind it. All right, so let's move on to our next company. All right, so McDonald and PayPal is reporting again, and then Alphabet, which is Google. So let's see what Google have up their sleeve for Tuesday. Let's go over and see what's going on with Google. As you can see, Google have been getting a lot of rejection and keep burning, and they're consolidating for me right now. So I strongly believe that they're going to beat earnings, but they're still in the consolidation phase. They can beat tomorrow and Tuesday, and we see Google goes back to over $200 a share. It wouldn't come to me as a surprise because I know Google has been doing tremendously well over the past couple of years. And if you had bought Google 1 year ago, let's find December. No, sorry, my bad. Let's find January. If you had bought Google back in February for $137, you would have been up on your money right now because the stock is trading at 165 again. So it's a stock that you can buy to go long on because they're doing well. And then Tuesday we have Pfizer reporting. We have PayPal. We have AMD reporting as well. Chipotle, which is that let's break down Chipotle. I think they're going through something right now. So let's go ahead and break that down. Tinker symbol is CMG. CMG. All right. I think from Chipotle cut their had their split. I think from they had their split, the stock has been getting a little beat up. But this stock used to trade at like $3,000 a share consistently, continuously beating earnings. As you can see, from 69, they got hit and now they're struggling to come back up. So, not sure what's going to happen, but when they report earnings on Tuesday, I think it's after hours standard time they're reporting. Let's see if the stock continue to rally or the stock keep getting rejection. But for quite a while they were doing well, as you can see, the stock was continue rising. But when they had their split, the stock take a huge hit, and of course you have investment in the company, and then therefore the stock is going through a rough time right now. But I will wait on this one, but it's a great company. They have been making a lot of money for over these years. But my main focus this week is nothing other than Meta. Meta will take the cake for me, and also Intel is reporting on Thursday. Intel, I don't know what's going on with them, so I would stay away until that company report. Uber is reporting, Mastercard is reporting, Apple is reporting, Amazon is reporting. Amazon wasn't doing so well, so let's go ahead and break it down. So we have ticker symbol AMZN. Amazon wasn't doing well. AMZL. Nothing came up. Let's see if I'm doing something incorrectly. AMZN. Yes, I was. AMZN. Amazon. Nothing coming up for me for Amazon. I don't know why. Unless it's in my share list. Oh, right here. I have Amazon at 100, and let's see, Amazon is the same thing. Amazon has been just consolidating from previous high. So we just waiting to see if they have a good report. Sold off, pushed up, got rejected, sold off again, and consolidation. So for me, I will wait to see what's going on with Amazon before I even think about getting any shares in this company, even though for the long term, I think this stock is definitely a good buy because we all know everyone shops at Amazon. And if they beat, then again, if you think it's a great company and you should get in, but it doesn't fit my criteria right now. Trade all over the place. And again, one year ago, if you had bought 1 year ago, you would have been up tremendously. But look again, they took a huge hit. So again, you never know. But if these company are company that you like, you should go ahead and pull the trigger and buy your shares. But as you can see, it's definitely something that's worth it because it's trading above our 200-day moving average and it continues to rise. But unfortunately, it's going through a rough path as all company does, and then after that it showed its strongest point where it goes up or it goes down. And again, let's go over Intel INTC to see INTC. Intel was a company that I was heavily invested in because it was doing tremendously well. But since Nvidia came out, AMD, everyone with the new AI hype, Apple dropped their business. Intel just has been traded negatively. So I would definitely stay away from this company if I could, even though they're reporting earnings. And of course, they could beat and go back to $46 a share. You never know. Look what Tesla did. Tesla went up 50, like from $113, no, sorry, $211 to almost previous high where it was trading at. Tesla is currently trading at $269 a share. Just look at this. If you had bought before earnings, you would have been up 27% on your money. So that's something you should definitely look into. So if something that meets your criteria, guys, again, feel free to do so. But I'm asking you, until then, if you think that I have earned your thumbs up, I have earned your time, next week is full of information, full of news. We have Friday, you want to pay attention to non-farm payroll. And then Thursday, you want to pay attention to continuous claim and also PCE prices out Thursday. So most of these can hurt the market where it can bring a negative outlook to the market alongside with earnings coming out. We have Uber, we have MasterCard, we have so much. This week is just full and packed of earnings. So this is something you want to pay attention to next week. And also, one thing that has been driving the market down that you want to pay attention to is our 10-year Treasury yield. It comes in as a negative influence to the market. When it goes up, the market tends to tank, the market tends to pull back. So pay attention to 10-year Treasury yield. So next week, we're going to have a handful of data to deal with, and also a handful of economic data to deal with, and a handful of earnings to deal with. And 10-year Treasury yield, we want to go down so the market can continues to rise and stay rising. But until then, guys, if you feel that I have earned your time and earned your thumbs up, go ahead, like that button. And if you think that I have earned a spot on your phone, on your smart device, go ahead and subscribe to the channel and click and turn on those post notifications so you can see when I am releasing videos, what's going on in the market, and how can we take opportunity in our financial life. But until then, like, subscribe, and stay tuned.